So, what technology company could make you thousands of dollars? Comment down below if you can guess the stock by the thumbnail. So, the company that could make you thousands of dollars is Google. So, if you guessed Google, good job, you were right. Do you guys use Google or do you own Google stock? If so, comment down below. Make sure to sign up with my Webull link in the description below and get yourself some free stock. So, Google's current market cap is $1.71 trillion. Their 52-week high is $153 with 78 cents. Their 52-week low is $89 with 32 cents. Their earnings per share is $5 with 43 cents. A way you can tell if a company is profitable is by looking at their earnings per share. If a company has a negative earnings per share, then you might want to reconsider before investing into that company. They currently do not pay a dividend, but that could change in the future. Now, looking at their annual revenue, in 2019 they made $161.86 billion. In 2020 they made $182.53 billion. In 2021 they made $257.64 billion. In 2022 they made $282.84 billion. In 2023 they made $307.39 billion. Just in case you don't know what revenue means, it's the total amount of money a company earns from goods and services. Now, looking at their annual net income, in 2019 they made $34.34 billion. In 2020 they made $40.27 billion. In 2021 they made $76.03 billion. In 2022 they made $59.97 billion. In 2023 they made $73.8 billion. Just in case you don't know what net income is, it's what a business or individual makes after taxes, deductions, and other expenses are taken out. Now looking at their annual operating income, in 2019 they made $34.23 billion. In 2020 they made $41.22 billion. In 2021 they made $78.71 billion. In 2022 they made $74.84 billion. In 2023 they made $84.29 billion. In 2023 their annual operating income was good, meanwhile in 2022 it sort of declines, so yeah, not so good. Basically, a high operating income shows profitability, while a low or negative numbers means that there are problems in operational expenses. According to 53 analysts, 57% of them According to 53 analysts, 57% of them are saying to buy Google. Now, what price target do analysts see Google at? For the 1-year price forecast, the average price target is 162.06 with a high estimate of 180 and a low estimate of 127.86. Now, looking at Google on the technical analysis perspective, the current support level on the daily chart is 137. The current resistance level on the daily chart is 145. Support and resistance levels are important because they help when to enter in a trade and when to exit out of a trade. That's why it's important to have a game plan using support and resistance. Try to be realistic where your support and resistance levels are at, so try not to overextend your support and resistance levels. What makes this a convincing buy is that there is a double bottom pattern forming on the daily chart, which could mean a signal to the upside possibly in these upcoming days. So what is a double bottom pattern? Basically, the formation of the double bottom pattern is seen as an opportunity to enter a bullish position. Sometimes it's best to look over a stock and see how it's done in the past because sometimes history can repeat itself. Now, what could happen tomorrow or in the upcoming days is that Google could start a reversal to the upside and just maybe it could touch that resistance level of 145. Remember, remember, this is just a prediction. It might or might not happen. But if you pay close attention, there's another pattern showing up, which is a triple bottom pattern. So what is the triple bottom pattern? Basically, when a triple bottom pattern forms, it signals to enter into a bullish position. Now looking at this with the moving average indicators on the daily chart, you can see that Google is below the 9, 20, and 50-day moving averages. More specifically, it's above the 200-day moving average, which is a good sign for the stock over the long term. So what is the 200-day moving average? A buy signal is generated when the price moves above the 200-day moving average. A sell signal is triggered when the price moves below the 200-day moving average. Basically, if a stock is over the 200-day moving average, investors have confidence in buying the stock. If it's below the 200-day moving average, investors may be losing confidence in the stock and may consider selling. Now, the moment everyone's been waiting for, how can Google make me money? It's by buying options. Okay, to explain it in the most simple way, basically, if you buy a call option, you're betting that stock is going to go up. Meanwhile, if you buy a put option, you're betting that stock will go down. So for me, when I'm buying options, I do not like buying options short term. I like buying options long term because they're way less risky and don't risk losing that much money if I'm wrong. Meanwhile, if I play a short-term option, I'm more likely to lose money because each day that passes, that option decreases in value. Meanwhile, the long-term option decreases in value too, but at a slower pace. Just like stocks, do everything with risk management. So have a game plan planned out, plan where you want to enter and exit out of a trade. Let me show you an example. So I'm interested in buying a call option that expires the 21st of June. More time means it's likely for Google to touch the resistance level of 145. Now, how much would I make if I buy a call option that expires June 21? So if Google touches 145 by next month, let's say March 6, I would make a total of $391, which is insane. And hey, a win is a win at the end of the day. And hey, a win is a win, and at the end of the day, it is what it is. But I want you guys to always remember this. We're not perfect. No one is perfect. But from the mistakes we make, we can learn from them. So if you ever feel like, man, the stock market is complicated, or I feel like I'm never going to make money off the stock market, don't feel that way. Practice makes perfect, so give it your all and don't give up. Also, if you want to practice your trading skills, sign up with my Webull link in the description below and get yourself some free stock and start paper trading with fake money. Now, let's say you're like, yeah, I think I'm going to stay off the options. They seem complicated. They are complicated, but don't worry. You always have the option to invest into Google for the long term. Now, moving forward, what would happen if you had invested $1,000 into Google for the long term? Let's take a look. Now, let's say you invested into Google for 10 years with $1,000. Then let's say you contribute $500 into Google monthly. By the end of the 10-year mark, your investment of $1,000 would now be worth $176,261. That is just insane because all you did was hold on to Google for 10 years and let Google do all the hard work for you. Now, if you had invested into SPY for 10 years with a small investment of $1,000, then let's say you contribute a monthly amount of $500 and reinvest your dividends to buy more SPY shares. By the end of the 10-year mark, your investment would be worth $129,933. That is just insane because all you did was hold on to SPY for 10 years, reinvested your dividends back into SPY, and let SPY do all the hard work for you. This is the power of long-term investing. Meanwhile, if you had invested that money in a savings account, it would be nowhere what Google or SPY could have given you over the 10-year mark. But what does everyone think about Google? Do you see them having a good future, or do you think they will struggle? Let me know in the comments down below. This concludes the video. Hopefully you guys enjoyed it. Get yourself some free stock when you sign up with We will link in the description below. As always, take care everyone, and I'll see you in the next video. Also, this is not financial advice. Alright, see you guys. Take care. Bye.